please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session, and as we speak, the benchmark indices are higher by close to about 0.3–0.4%. There was a bit of a scare around that 10 o'clock mark when the Nifty, the Bank Nifty, the mid-cap index all took a nosedive. But from those levels, there has been a recovery. So, for instance, the Nifty is seen close to about a 50-point recovery from the low point of the day. For the mid-cap index, it's more than a 100-point recovery from the lows. That said, the advanced decline ratio is on an even keel, and this is despite starting a trade with a significant advantage to the gaining side. So let's get the intraday chart up for you on your screen. For the last 2 hours, those lines haven't moved.
Hi, Rima. Well, we're holding in the green as we speak, so let's see whether or not we can hold on. Remember, from the highs that we saw, that's just around a week or so ago, we're moving towards the 11,000 odd mark, 10,930 odd. From there, we have corrected closer around 500 points approximately. So let's see whether or not we can go ahead and conquer the 10,500 mark in today's trading session.
Check on the markets as we speak. It's about a 150-point gain on the Sensex. Gains are led by the IT stocks primarily. So Infosys, TCS, HCL Technology, State Bank of India has effected about a 2.5% recovery from the low point of the day. Sun Pharma is leading the winners list, and Bharti Airtel is looking good. Yesterday, we got the TRAI had released the wireless subscribers numbers for the month of March, and on the back of declining subscribers for weaker names like Aircel, Tata Tele, Idea, Bharti, Jio continue to make gains and inroads into the subscribers. The mid-cap index continues to languish with a cut of about 0.4%. But the focus today is on Tata Motors. That stock continues to remain under pressure. Sonia joins in with more on what brokerages have to say. Hi, Sonia.
Hi, Rima. Thanks for that. Well, you know, most brokerages have cut their earnings estimates for Tata Motors after the disappointment that we've seen this quarter. CLSA says it's a margin miss both at the Jaguar Land Rover and the standalone business. They retain a sell with a target price of 295. In fact, they are the lowest on the street. They say that even the JLR guidance that the management has given of 4 to 7% from FY19 to 21 is muted, and they've cut the FY20 EPS by 7 to 8%. Deutsche Bank also cuts the FY20 EPS forecast by 12 to 14%. They say that not only the margin outlook, but the pricing outlook is also quite challenging from the management. But they're quite high as far as the target price is concerned. They've cut the target price from 465, but are still standing at about 430. Macquarie has lowered the FY19-20 EBITDA by 9 to 11%. They say that the change in the capitalization policy and challenges in JLR is the reason why they have cut their target price and earnings estimates. The India business is turning around. That's true, but it pales in comparison to the fall that we're seeing in Jaguar Land Rover. So the India business turnaround is pretty much lost over there. If you look at the JLR margins as well, an annual trend of the JLR margins will give you an indication that things have worsened. However, I did speak to the management a while back. They did indicate to me that the growth in FY19 for Jaguar Land Rover will be better than FY18.
All right. In fact, Kevin Lee caught up with the President CV Business of Tata Motors and asked him about the highlights of the quarter gone by. Here's a slice of that conversation.
I think over last 1 year, while the entire market went up by 21%, we grew by 23%, and as a result, after a market share decline for almost 7–8 years, we have been able to not only arrest that, but we have been able to grow the market share by 0.7%. Within that, we have grown the market share in the intermediate and light commercial vehicle by 2.7%, in small commercial vehicle by 2.1%, and in the passenger vehicle by 1.1%. So overall, I must say throughout the year, good market share performance. In addition to that, I think although we went into BS4, which was one major transition, we have been able to improve our margins also through a lot of efforts on cost reduction. So I think overall it has been a good year for us.
What does the turnaround 2.0 mean specifically for the CV segment in terms of the number of launches that we could see in FY19 versus FY18?
Yeah, so I think we will have multiple launches. See, Tata Motors CV has a very wide portfolio. And if you look at FY18, including the variants, we had almost more than 70 launches. And there are many more launches planned for this year. So you would have seen a glimpse of that in the Auto Expo when we unveiled some of the products. So we are quite excited, looking forward. There are a lot of new products in the pipeline, which will help us to improve our market share.
All right. right, let's now talk about the other casualty in trade, and that's Jet Airways. Skidded practically down close to about 7%. Its 2018 loss now stands at 50%. Sonia, unexpected loss, right? 1,000 crores this quarter.
Yes, nothing that the street was factoring in for sure. So it's come as a big shocker. 1,045 crores. And, you know, even the revenue growth that the company saw was much less than what the street was estimating. Auditors have once again raised concerns with respect to the ability that the company has to generate cash flows because the debt continues to be very high. Just to quickly take you through the numbers, a revenue growth of just 8.7% in an environment where the passenger growth was good. So the yields for the company have been under pressure. Then there's an EBITDA loss of 765 crores that the company has reported. Now, they did mention that fuel expenses have gone up substantially for them. 30% higher fuel expenses is what we've seen. Also, you know, crude continues to remain high, and it's harder for them to pass on the ATF prices to passengers in competitive routes. There's a forex loss that the company has seen this time to the tune of 156 crores. There's a one-time maintenance charge that they had to incur to the tune of 253 odd crores. And for the full year of FY18, once again, it's a big loss that Jet Airways has seen to the tune of 634 odd crores. Back to you.
All right, Sonia, thanks so much for that. Well, L&T Infotech posted a strong set of numbers this quarter, ending the year with a dollar revenue growth of around 16.7%, as well as constant currency growth of nearly around 15%. We spoke to the management earlier today to understand the outlook for the company going ahead. Let's listen in to what they had to tell us.
I think with the deals that we have closed and with the investments that we have made in the growth of top 30, top 50 accounts for ourselves, the kind of new accounts we have opened and the large deals we have closed, we are very optimistic about the year ahead, and we want to again say, since we don't give revenue guidance, we want to be in the leaders quadrant, if not the leader yet again.
Okay, strong double-digit growth to wrap up FY18. Confident about FY19. Nigel, yesterday on your holiday, you were telling us about how NMDC has gone ahead and raised prices. What's the key reason for that?
Well, you know, there's a bit of a surprise, actually. The street has been penciling in some rate cuts, some price cuts going ahead. But NMDC, they've gone ahead and they surprised everyone. They've gone ahead and increased prices by around 100 and 150 rupees, depending on what you're looking at, fines or lumps. Remember, we alerted you yesterday itself that they had cut prices in the month of April, but now they're feeling confident because they believe that demand is strong enough. The rupee depreciation as well as helping them, because they believe now, in fact, if you're going to import it, it'll be at a premium of nearly around 25 to around 30%. In fact, we spoke to the management earlier today of NMDC. Let's listen in to what they had to tell us.
For landlord customers, around 30%, whereas for East Coast is around 25%. Volume we are targeting last year, as we have announced in our results. Last year we have done record sales and record production. And this year also we continue to better those records. We would like to grow at 8 to 10% without, I mean, this prices hike has nothing to do with the volume drop.
All right, Godrej Industries has also disappointed the street with its quarterly numbers this time. The stock is down 4%. For more color, Sonal joins in.
Very weak set of numbers, Reema, as you rightly pointed out. The stock is down because of the weak performance that the stock is given. Revenue went up by around 17.5%, which was very decent. But this time around, the company posted an EBITDA loss of around 30 crores versus profits last year. This was all due to higher other expenses. The employee expenses shot up by 36%. Cost of materials shot up by 10%. Other expenses were up around 24%. Remember, Godrej Properties also posted an EBITDA loss this time around. Profits, however, were up 2 times at around 277 crores, but that was actually fueled by higher other income that came in at 340 crores this time around. Excluding the impact of higher other income, it could have actually posted a loss this time. Volume growth across segments have been quite strong in double digits. Animal feed grew by around 19%. Dairy segment grew up around 15%. But in the standalone business also, we saw some weakness. They reported a standalone loss of 48 crores versus a loss of 34 crores. And that's why the stock is down in trade today.
Okay, all right. Thanks so much for that, Sonal. Well, Jain Irrigation posted a strong set of numbers this quarter, led by a strong growth in the agri inputs as well as the plastic business, though the agro processing was a tad bit weak. Let's listen in to what Mr. Anil Jain, the MD of the company, had to tell us about growth going ahead.
North of 30% definitely will do for food. Margin should also grow. Last year, partly it was also about the fire we had at onion business, and we have still not booked this loss of profit. Even though we have insurance, that should also flow into this year. So this year, very strong food business in terms of margin as well as the sales, and continued very good business in MIS as well as the piping business. And some of our overseas acquisition which we did in food in February will also come in now full time, into the current year in terms of overall value or in terms of numbers. And that should also add another 150-200 crore to food business. This quarter we are also very focused on cash flow, and we have generated, I think, almost north of 500 crore free cash flow in this current quarter.
Okay, unfortunately, we've been talking about many stocks which are currently under pressure. We're Tata Motors, Jet Airways, Godrej Industries. We thought Jen Irrigation had good numbers, but that stock too is down close to about 5.5%. But the sector which has taken it on its chin has been oil and gas. Take a look at HPCL. This entire week, it's seen a cut of close to about 11%. ONGC is down nearly 7 to 8%. To decode everything that's happening in the oil and gas space and what you need to know, joining us is our new head of research at CNBC TV18, Sonal Sachdev. Hi, Sonal.
Hi, thanks. Like you were mentioning, Jet Airways off, HPCL off, ONGC off. Jet, again, there's aviation turbine fuel there, so there's the oil aspect. Oil has actually been roiling the markets because there are wide implications across sectors. You have, this seems like a sustainable run for oil. Oil is holding up there. Analysts are looking at oil at about $90. You have even the government sort of acknowledging, saying that it's not a short-term problem, but a 6-month problem. You had, the heads of PSUs yesterday saying that they're not seeing oil go below, maybe $70, $75. So, I mean, and if you recall some time back, Mr. Jaitley had, in an interview to CNBC, had indicated that anything above $75 is going to be a worry for the government. So there are concerns for the fisc. There are concerns in terms of the macros, impact on interest rates, inflation. It's going to push up everything. I mean, you look at key thing of oil is oil goes into all transportation. Yeah. So freight rates, anything you move across the country by road or air or whatever is just going to get more expensive, and that's going to hurt companies across sectors. Oil and gas sectors upstream and downstream are likely to have to bear some of the burden because the government is likely to share it with some of them. So that's the pressure you're seeing on the market. In terms of these stocks, you have the airline stocks, ATF there. There's a demand that GST, ATF should be brought under GST. Yes. We don't know if that's going to happen, but airline stocks are taking a beating. Then you have the commodities, say like cement, agri commodities, which are low value commodities, high volume. So your truck filled, going with stuff which is very low value. Can you imagine what that adds in terms of freight cost to that? So let's say for cement, for instance, you might have companies which are there in their certain areas, and if those are deficit areas, they gain because anybody trying to tap that market from the outside, their costs are going to be higher. Chemicals, again, again, chemicals, plastics, it'll just filter into everything. So wide impact for oil across the sector, for the economy, for growth and the markets.
All right. Thanks so much for that, Sonal. Well, let's hop across to the other Sonal. In fact, Sonal is joining in to tell us about Eros. Sonal, how are those numbers?
Very strong set of numbers, Nigel. The revenue growth, that came in at 32%. EBITDA grew by around 130%. Margins, they expanded by 1,600 basis points. All this leading to a profit growth of around 85%. Even in terms of guidance, the management guides that the margins will be, they will see a margin expansion in near future also because they'll be investing in content-driven films which have higher return potential. Also, 40 to 50 films across languages are slated to release in FY19, and also they're focusing on IP creation across formats and screen. So we'll have to watch out for the stock performance going forward based on the company's guidance.
All right, Sonal, thank you very much for that. A quick recap then of the top buzzing stocks: Tata Motors, Jet Airways, L&T Infotech, NMTC, Godrej Industries, Jen Irrigation, Eros, oil and gas companies like HPCL, BPCL, IOCL, and the impact that it has on the economy and the rest of the markets.
Vedanta continues to be in focus. Remember, in the last couple of weeks, the stock has corrected nearly around 8 to around 9%. This has Tuticorin and continues to remain tense. One more person has been killed in police firing as anti-Sterlite protests continue. Now, the latest casualty has taken the death toll to around 13. Power supply to Sterlite Copper has been stopped after the High Court order, and in fact we have seen that various parts have been suspended as well. Vedanta Group Chairman Anil Agarwal, in a statement, has moved to reiterate the company's commitment to the city of Tuticorin. Let's listen in.
I'm very sad to hear the incident, what happened yesterday. This was absolutely unfortunate. I have my full sympathy with the family. The plant is closed because of annual shutdown, and we are waiting for clearance from the court and the government to restart the plant. And we are strictly following what court and the government orders are. We always make sure the community and the Tuticorin people at large prosper with us.
Well, here's a word from emerging market specialist Bryony Deutsches of Aviva Investors in a conversation with Udayan Mukherjee as part of our series. In fact, says that growth dynamics seen in India and China, coupled with strong economic fundamental, look good. Let's listen.
I think the long-term fundamental argument for emerging markets is most definitely intact. We are in a period of volatility, extreme volatility. The US dollar is strengthening on growth that is coming through, but coming through in line with expectations. You saw the US Treasury yield spike through 3% on retail sales numbers, which were in line with expectation. This obviously is a headwind to emerging markets. India, China, the two biggest emerging markets, have a combined population of 3.7 million people, most of which are young income earners. You've got this emerging middle class that is coming through. They're growing richer. They want to spend. Those growth dynamics, coupled with the stronger economic fundamentals, look good for emerging markets. I think financials are an opportunity within India, but they're also a risk. I mean, we know that the public banks are in a mess. The government is working to rectify that, recapitalise. The bankruptcy law comes through. One would hope that that enables the financial sector as a whole to move forward. But it's a two-speed market. What we need to watch is the cost of funding. Liquidity is tightening in India, and the cost of funding is growing. So you have to be very careful looking at banks' balance sheets, how they're funded, what proportion is wholesale funding, what proportion is deposit funding, therefore more stable, typically cheaper, and therefore the cyclicality and volatility that you may see in returns for the various banks.